Hello, ladies and gentlemen. So this is Coach Josh, and in this video, I want to quickly walk you guys through support and resistance. It's a class that has been done many times over, but I'm just gonna I just decided to draw the chart on my just identify those areas on my chart so that they say practice brings mastery. So I'm just going to do it a couple of times. Just identify support, resistance areas, trend lines. The more you understand this, the better your trading outcomes are going to be. My understanding of this, for example, helps me to avoid a drawdown, a very serious drawdown that happened this afternoon because I took profit once I got to a resistance area. So you probably already understand this, but this will just help make it better. Practice, like I said, brings mastery. So this is the goal chart, and we already identified something that the higher the time frame you're looking at, the more accurate your chart is going to be. If we were to quickly give like a quick definition to support and resistance, your support areas. So let me just move this up a bit. Your support areas are areas that when price was going down, it got to that point and could not go further. Now, what actually influences the movement on the charts that you see, is the actions of buyers and sellers. And so, for a moment, let's just forget about the charts and let's think about eggs. You know, um, so imagine that right now we had so many people who went into poultry farming, and so everybody had eggs. At every junction, every corner, there was people selling eggs. Because there's so many people selling eggs, that means what? The supply is high. If supply is high, what happens to price? Price goes down, right? So think of the chart. Whenever you see price going down, it's because of the action of sellers. Whenever you see price going up, it's because of the action of buyers. So the chart shows the price of an asset. In this case, it's gold. If we were to call it eggs, right? Around here, what this would mean is that there were many people who wanted to buy eggs here. And so because there were many people who wanted to buy eggs, they were placing orders for eggs. And so so demand became high. So it caused the price of eggs to start to go up, right? Caused the price of eggs to start to go up. So as the price of eggs started going up, many farmers started looking, oh, eggs is a good business. We need to get into the business of eggs. And so many people started, going into eggs and started producing eggs. And now, you now had many people who were selling eggs. Many people. So it got to this point and there was now I think they call it a glut. So many people selling eggs. As a result, the price of eggs began to come down. But it got to this point and there were many buyers. So many people who had been selling at maybe 3.5 and the price, I'm just using just a random number. Then the price started to come down and come down and come down. When it came down here, there were now many people who were ready to buy. So as they started to buy, the price started to go up again. Okay. So the price that you see, the price action is really a reflection of buyers and sellers, the activities of buyers and sellers on the market. Okay. And so the reason why the best traders use trading psychology is because they understand it's humans that are the buyers and the sellers, right? So the big banks, the institutions, they've studied and they have AI models, they have algorithms, they understand human psychology. They understand that people are moved based on emotions of fear and greed. So they understand how to push the price to trigger emotions of the average person in a certain way to cause them to buy or to cause them to sell. The experienced trader is simply looking at the charts and trying to identify what is happening, trying to predict what will happen again based on what has happened because humans are the same. What happened before was a result of humans. So because humans never change, pretty much patterns tend to repeat themselves, in the market. So the reason why we technical analysis is simply looking at what has happened in the past to use it to predict, to understand the probabilities of what could possibly happen. Does it always play out to the exact T? Maybe not, but to a large extent, because like I said, humans are the same. It's fear and it's greed. So I said a support area would be an area where whenever price got to, the price didn't further continue to decline. It didn't continue to sink. It got to that point and it stopped. So it's usually good to identify your support, your resist. Now, your resistance is an area that, excuse me, as price began to ascend, let me see if some of you yawned. If you yawned as a result of my yawn, drop a Y in the chat. If my yawn made you to yawn. If my yawn didn't make you to yawn, just drop a no in the chat. Anyway, so give this video a like and subscribe if you're getting value from this. Share with other people as well so that they can also improve in their trading skills and we can all get paid, get paid together. So I said a support area is an area that as price was declining, when it got to that area, it kind of like found a floor and price held. Price didn't continue to decline. A resistance area would be an area that as price was ascending, so I just had a hot bowl of egusi soup. Those of you who are from Nigeria, you know what that means. So I guess this is why I'm yawning, but I want to get this video done today. Did I introduce myself? So this is Coach Josh. Joshua Moshika, they call me Coach Josh. And this video is primarily for those of you who are within the AkashX community. But anybody can benefit from watching this video. Okay. All right. So a resistance area is an area that as price was ascending, got to that point and could not continue beyond that point. So I identified a line using the weekly time frame, okay, to identify a resistance area. Maybe I should just put off my video so that my yawns do not cause you to keep yawning endlessly. So let's just turn off the video. Stop video. There we go. All right. So as we see here, price was traveling up, got to this area, to this zone, and came back down, traveled up, got to that zone. In fact, it went above it a little bit, but before the end of the day, came back down because I'm on the daily time frame. So each candle represents one day here, right? So it got there, came back down, down, traveled sideways, came down, tried again. You can see that. So if I had already identified this resistance, I would have been anticipating that when price got there again, it would reject. Meaning I could have placed a sell here. If I placed a sell here, look what happened. Price came down. And it came down a good number of pips. This is 2059, came down to, wow, that's a good number of pips there. 2059, but this is 2066 to, wow, 1982, 1981, 1974. So just about that's $90. That's about 900 pips. So that would have been a very good move there. So the price, held. It got there. Now, eventually, after multiple attempts, multiple touches, it eventually broke above. So now, whenever price breaks above a resistance area, that resistance becomes a support. So think of this like this was a ceiling before, and now that price has broken through the ceiling, that ceiling now becomes a floor. So if for any reason we see price come back all the way down here, we expect it's going to hold here and go back up. So this would be a good place to put a buy. But it's really far from where price currently is. So let's identify some support and resistance areas much closer to where we are now. So we're on the daily time frame. So I'll come here. You have this even if you're using mobile. It's also on your phone. So I look for my horizontal line. And, once I place it, and so you can just move this around to find, where would you move it to that would have like multiple touch points, you know, multiple touch points. So, for example, you can see that here we have a touch point there multiple times. Let me just expand this. Good. So you can see that multiple times, when price touched that place, it held multiple times. Price touched it, it held. It didn't continue to come down. It didn't continue to descend. So we'll call that area an area of support, right? But because this is a daily support, I want to change the color. I like to code if the arrow is changing. I like to code um my support and resistance lines using different colors. So for the weekly, I like to use this color. So I know that, man, that's a very strong area because I identified it on the weekly time frame. On the daily time frame is also strong, but not as strong as the weekly. You understand? So if I do the daily with my yellow, I understand if price for any reason should come near any of my yellow horizontals, that's going to be a good area to bounce. So this is a good support. Let's look for another one. Let's see if we can find another area where there were multiple touch points, whether as a support or as a resistance. Remember, it's never going to be perfect, but I just decided to put one here based on, now maybe because I've looked at the chart so many times, it's easier for me to identify them now. But how did I decide this? So first of all, I saw that this was the highest point here, but I also saw that, so highest point here, here. Okay, let me just use my arrows. So we see that here. Okay, right next to it again, we see that when price also came here, it didn't continue to go up. Now here we'll call this one a fake out. It came out a little bit, but sellers sent the price going back down. This again, it came above, a fake out. Now, whenever it goes above, let's change to the brush. Whenever it goes above, so if price, let's assume that price were moving like this, and then it breaks above, what you want to see is as the price starts to come back down, you want to see that it holds here. So it's called a confirmation. So once it confirms and then it begins to continue on the onward move, good. We can say that resistance has been flipped into support. Make sense? Resistance has now been flipped into a support. So in this case here, it broke out, but it didn't hold. Came back down. So we'll call it a fake out. We could call that a fake out. So let me delete this. Okay. So we could call this area, that's 2430. We could call that an area of support. Let's see if we can find any other areas of interest. So, so when I move this, I'm seeing that around here, price respected this area. Price respected this area. Okay, that's 2530, 2531. Price respected that zone. So if for any reason price were to come back down, if it got there, I would expect it to hold. Let me look for another area on the daily time frame now that I would consider to be a support area or a resistance area. Okay, so in this case, instead of using the horizontal line, since it doesn't run all the way to the back, I'm going to use horizontal ray. The horizontal ray will just show me from, you can see, it just shows me from here, So let me change it to my yellow. Okay, so that's a daily time frame resistance or support. If we're coming from under, this is a resistance. But if we're coming from the top, it's going to act as a support. Okay, now let's look. So that's 2530. And this is looking on the daily time frame. I think one more area of interest on the daily time frame would be here, which is where, you can see there's a green dotted line. I actually have placed a pending order there in case price comes down that way. So this area, okay, is another area of, I would call that a resistance, because when price got there, it came back down and kind of hovered around it until it broke through it. Okay, now let's now come down to the 4-hour time frame. On the 4-hour, we'll probably find more areas of, okay, so now that we've come on the 4-hour, can you see that this last one that we identified, price kept, every time price came close to it, it was rejecting it, it didn't let it go until it finally broke above it. And now we're currently above this. So if we were to try and identify some 4-hour support and resistance lines, gold has really moved up. So gold came all the way up to 2790. We're currently down, came down to 2740 just a while ago. So we don't have a lot of price action. Price hasn't spent a long time in this area. So it's going to be difficult to identify reliable areas of support and resistance on the 4-hour time frame. It's going to be difficult to identify reliable areas. Anything you're identifying now may not be so reliable in terms of strength. When price gets there, if it's a support, will it hold? We may not be too sure. If it's a resistance, will it hold? We may not be too sure. But let's still see what we can identify in terms of support and resistance. Can we say that here we found the support and resistance? Okay, good. So look at this now. This was the trade that I exited. And then this is also where chart patterns comes in. So this is, you can see that on this side, let me use my arrow. I actually hope this is making sense. So this was a previous high. And when price got here, it came back down. Okay. Eventually it broke above, then came back down. Now, today, we came down, right? And then we started to go up. But when I noticed that this was a previous resistance, I decided to take profit because I was expecting price to go back down. And that's exactly what happened. So when you're able to identify your support and resistance areas, it helps you in your decision making, knowing when to enter the market, knowing when to exit the market. So this is just like a summarized version of identifying your support and resistance areas. Okay. I usually like to use the 4-hour time frame at minimum to identify support and resistance. Okay, so let's see whether we can identify another area of support and resistance. Maybe here. Here might be, we could consider here to be a support and resistance on the 4-hour. So I'm going to use white for my 4-hour. I just like to code them in colors, but you don't have to have your chart so messy, So on the 4-hour time frame, when we look at it here, when price got here, it initially held, then it broke above it, and then look, it flipped it into a support. So let me show you what I'm talking about. When it was coming up here, at this point, it stopped. It didn't continue the journey. So this candle stopped here. The next candle couldn't break above. The next candle struggled to break above. Then, let me zoom in. All right, so look at that. So price was traveling up. This candle stopped at this point. The next candle couldn't go above that point. The third candle tried to go above, but didn't close above that point. Then eventually it got above, and then it flipped the resistance into a support. How do I know? It broke above, and when it started coming back down, look, it stopped. It didn't continue. It stopped at the line. The next line, same thing happened. Stopped at the line. It couldn't continue coming down. So it flipped the ceiling into a floor. So when you identify those areas on your chart, you look at previous areas of resistance and support, it helps you to identify future possible areas where price will either bounce or get rejected. So look at those. We identify those. Now, when price came back there, what happened? It held. So if you had put a buy at this point, you would have made some money. So this line is at 2713, and price went all the way up to 2743. That's about 30 pips move. That's a 30 pips move. Okay? So price came back here, it held. You see it? When price came back to this area, it held. The next candle, same thing. It didn't go below it, and then it went above. Okay? So that was for that support. For the resistance though, look at this arrow. Price got here and it came back down in the past. So when I look at it, it broke above here and came back down. But I then noticed that this candle didn't go above this point. The next candle didn't go above this point. This one was a fake out. That's why it's a wick. So it wicked above, but the close was below that line, telling me it is respecting this area, meaning sellers are interested in this area. They are selling here, and because they are selling, it's going to push the price down. There are many people selling the assets. Many people selling eggs will cause eggs to be cheap. If eggs are on every corner, eggs becomes cheap, right? So because here there were sellers that sent the price down, many sellers caused the price to go down. Buyers kicked in, it went above, came back down, but again, as buyers were trying to push price up, it didn't go beyond this point, next point, and so there we have it. So we were in a trade, we were in a trade that Joel called, but I decided to close my trade. As a matter of fact, let's look at it. Let's look at the close position. So this is actually a new account. It's a 100K account. So well, the entry price, so this was a tap to trade. Entry price was 2757. 2757. Okay. But I exited at 2758. And price has come all the way down now to 2743. As a matter of fact, it even came as low as 2738. Look at that. You know, the same thing happened here. Entry price was 2739 and I exited at 2761. Why did I exit? So this is a 4-hour time frame. Let me come down to the 30 minutes so it becomes a little bit more clearer. So in this case, each candle represents 30 minutes. So this is our current 30 minutes. This was the last 30 minutes, the previous 30 minutes, the previous. Okay, so 2739, 2739. No, sorry. 2756 was the entry price, 2756, and the exit price was 2761. So 2756, you know, somewhere there. But as I saw that price was struggling to go above, I decided to close. I closed at 2761. And look what happened. Price came back down. I'm currently not in any trade because I expect that price could possibly still come down, you know, over the next couple of hours. So that's identifying support and resistance lines. Now I'm going to quickly segue into trend lines, which are also related to support and resistance lines. The trend, you know, so you have either an uptrend, a downtrend, or a consolidation. Let me erase all these arrows so that the chart becomes a little bit cleaner. So you can always watch the replay for better understanding. You buy, so a rule generally is you buy on support, you sell at resistance. You buy at support, you sell at resistance. So sometimes if Joel is calling a trade and is calling a buy around the resistance, I'm not likely to take it. If I take it, I'm going to use a very small lot size, expecting that price could possibly further come down, and then I could add to my position, you know, with a bigger lot size on its way down. So you buy support, you sell resistance. But now I want us to quickly also look at some trend lines because trend lines also help to identify the direction of the market. Price generally likes to respect the trend. Whenever it breaks a trend, you know that, okay, I need to pay attention to what is happening here. So if I look for my trend line tool, I come here, I click, the first one is the trend line. So you're basically going to try to get at least 2 or 3 touch points. The more the number of touch points you have, the better. Minimum of 2, but if you're able to get 3, excellent. So in this case, you can see that we have a touch point here, we have touch point here, we have touch point here, okay? So generally speaking, price, so clearly this is an uptrend, as you can see. This is an uptrend. So price generally likes to respect the trend line. So in this uptrend, price would go up. Sometimes it would go away from the trend line, but usually after some time, it's going to come back and revisit it. And then it's going to go away as it continues the uptrend. But right now, I expect price to also come and possibly revisit this trend line. It's a good possibility that we'll get a retest of this trend line. So this is like a major trend line in the 4-hour, but I could even try and identify another one. This was the one that also showed me another sign of a reversal. So if I start my line from here and I do this, okay. So one touch point, another touch point, another touch point, multiple touch points, okay. So this was the uptrend that price was respecting. Then it broke below. Once it breaks below, that's a problem. It broke below, But it didn't only break below, it now began to respect. So in trying to go back above, it couldn't. You can see that. Let's zoom in. It touched it or came close to it, but couldn't now break above. Now it's respecting it as a resistance. So if you come to a smaller time frame, you will see exactly what is happening on a smaller time frame. So price broke below, and then you see that it flipped it into a resistance. So your trend line, so you want to identify your uptrends, your downtrends, so just simply try and get at least 2 or 3 touch points. Let's see if we can find some other, let's look for some other trends. Okay, so this is the 1 hour time frame, just for explanation purposes. If I were to identify a trend line here, I'll put my line here, do something like this. So I've gotten multiple touch points here. Okay. Once you have at least 2 or 3, you're good. So price has broken below this trend line on the 1 hour time frame. So even on the 1 hour time frame, it looks like we are going down. We're kind of looking bearish. Price is going down. So on the 1 hour time frame, price broke below, kind of came up, got rejected. So price looks like it's still going to come down to lower levels. That's what it's currently looking like right now. Let's look for another area we can identify a trend line. Okay. So I could decide here to draw another trend line. So price went up. Can you see how it wicked down? So starting from here, it went up. At this place, it held it and went back up. Came here, held it, continued. So all these were good places to take a buy. Good places to take a buy. Price kept on respecting the trend. Good places to take a buy. But here we are now, it broke through the trend. So the trend changed, right? It came back down, but it respected here and then continued its journey up. So support, resistance, trend lines are going to help you in your trading. Remember, you want to start from the bigger time frames before you make any decision. First of all, look at what is happening on the larger time frames. What's the direction on the larger time frames? What's price saying on the larger time frames before you now come to the smaller time frame? When I say larger, 1 week, 1 day, 4 hour, before you start to look at analysis on the 1 hour, 30 minutes, 15 minutes, 5 minutes, and 1 minute. So hope you got some value from this. If you have any questions, drop them in the chat, in the comments, and I'll respond to them. I'll respond to all your questions as quick as I can. Hope you got value. Hope you got some value from this. So with this, come to the end of the presentation on support, resistance, and trend lines. Remember to like, subscribe, hit the notification. Bye-bye.